The cost of living crisis is among the top concerns of striking U.S. auto workers, and it's up to the Fed to deal with entrenched high inflation, which stands at 3.7% on higher oil prices. Markets expect the Fed will forgo an interest rate hike following its two-day meeting from Tuesday to Wednesday. This will be the second pause after the Fed hiked its benchmark rate to a 22-year high. The 10-year Treasury yield rose to its highest level since 2007 ahead of the conclusion of Fed's meeting today. And for more on that, let's invite our guest, Hong Hao, the chief economist of Grow Investment Group. Hong Hao, great to see you. So how does this ongoing dispute in the U.S. regarding the U.S. debt impact the formulation and implementation of economic policies?
Yeah, I think, thanks for having me. I think, ever since a couple of years ago, it seems to me that the U.S. government had a debt crisis like every now and then. Right, so, the back of my memory, was that, a few months ago, they just passed the debt deal. And ever since then, the U.S. government debt has actually increased 1.6 trillion U.S. dollars. And also, the total U.S. debt has surpassed 33 trillion U.S. dollar mark. So it's a very substantial debt load they have to deal with. So I think in the worst case scenario, it means that they will have to shut down the U.S. offices, government offices for some time. And also, for Biden and also for the Democrats, because next year is an election year. Right? So normally you need to spend big in front of an election year to buy votes to win the election next year. But it seems so it seems to me that now they're sort of having some monetary issue, and they're probably gonna scramble to find ways to pay the bills.
And what are the potential long-term effects on the U.S. economy, particularly in terms of fiscal sustainability, interest rates, and the ability, of course, to fund important government programs and initiatives?
Yeah, I think the debt ceiling just has to be increased even higher. And also, if you remember back in August, there was a sovereign downgrade by Fitch rating agency of the U.S. government debt. Back then, already the market and also I think, many of the observers are very concerned about the debt level, right? So now it's risen another 1.6 trillion. And also, the Democrats seems to be very liberal with their budgets. They're trying to forgive student loans, for example. That would cost a couple of trillion U.S. dollars as well. So it remains to be seen. I think right now, the only solution really is to increase the debt limit further so that the U.S. government can continue to borrow.
Yeah, but the deadline is approaching. So how does this controversy affecting investor confidence, both domestically and also internationally?
Yeah, I think in the near term, people are watching the Fed and see what is the monetary decision. After all, if you increase the interest rate too high, the U.S. government may have problem even to pay off the interest rate payment that is being due. And also, going forward, because of the supply of the U.S. Treasury is going to increase, and therefore it would push the long yield even higher. And so if you consider all of this, and also if you consider the term structure of the U.S. Treasury yield, it means that the U.S. long yield, the 10-year yield, would be well above 5% or even closer to 6%, right? So now it's like four and a bit. So what that means is that, as you borrow even more, you would get into even more trouble, and you would even have trouble paying off the interest payment. So really, I think the international community is very concerned. And this concern is being reflected in the volatility of the market.
Yeah, for sure. Thank you so much for your insights. Always great to have you on the show. Hong Hao, Chief Economist of Grow Investment Group. Now let's get a check on how